it is all about QuickBooks Online, but we are focusing much on the sales model, going through the sales workflow. So we are going to go through estimates throughout to cash, that is receiving payment on estimates that are being created. I mean, the process that we go through before we receive payment. So the process starting from creating of an estimate, or what you call a quotation or a pro forma invoice, through to receiving payments from customers. So we would look at streamlining our sales in QuickBooks Online, discovering how to go from quote. So in this, for the purpose of this training, if I say quote, I mean an estimate or a pro forma invoice, how to get paid faster and keep our business finances on track. So in this webinar, we'll break down creating quotes and estimates on QuickBooks Online, converting them to invoices, collecting payment faster, how to set the system up so that it will help you in collecting your payment and reducing your receivable balances, and tracking sales and cash flow. So these are the things we are going to focus on today during this webinar. We know that in QuickBooks, or even in our businesses, when we talk about sales, sales has to do with the process of exchanging goods or services for payment or for a consideration. So you know that in selling, there are at least two parties involved. That is the seller, and then the other party is the buyer. And then they all have their bargaining powers. They all have their contractual obligations to perform. So we know that for selling, the seller is supposed to transfer some goods or render some services to the buyer. And then in response, the buyer will also give out a consideration, being cash or any other form of payment. So that is what we are going to go through. So this is the QuickBooks dashboard, and then we are using a sample company for this training. So for the purpose of this training, I'll be creating certain items, certain customers in the system, and then we have to really take notes. Yes. So as I stated, selling or sales start with two parties, and then each of the parties, as stated in IFRS 15, we know that in a revenue recognition and contract with customers, it passes through these processes. Before you can recognize revenue, there must be some selling or there must be a transaction. So we are dealing with two particular parties, a seller and a buyer. Now, the buyer can be an individual or an organization, or what you call a company. And then the seller can also be any type or any form of the businesses we have, being it a sole proprietor, being it limited liability company and all that. So when it comes to QuickBooks, we are going to deal with the sales model. So on the left navigation bar, we have what we call the sales model. So I'll click on the sales model, and then on the sales model, we have a lot of sub models. That is what we are going to deal with. Now, as I stated, we are controlling the system, we are the company selling, and then the person coming in is a customer. So the first point of call is to recognize a customer on the system. And then after recognizing a customer on the system, you also recognize what we call products and services, to know or to recognize the system what the person is actually coming in for. So for the purpose of this training, we will create a customer known as Tech Age Limited. So after clicking the sales model, you come to the sub models, you click on the customers. So this displays all the customers that are being registered on the system. So as stated, for the purpose of this training, I'm creating a new customer called Tech Age Limited. So you click on the plus new or the new customer button, then you input the details. So the company name, Tech Age Limited, and then that will be the display name. You can choose another display name as Tech Age or however you want to place it. Now the email, let's say hello@techageltd.com. The phone number you provide, all other information. Is there a sub customer, the billing address, and all that? But the key thing that you have to input is the display name. That is why it is being tagged with asterisk. It is compulsory that you key in that. Now I'll save this customer. So we know that now we have a customer name known as Tech Age Limited on our system. Now, what are we going to exchange for a consideration? What are we going in for to take money or to take any form of payment? So we have to also recognize what we are selling to Tech Age Limited. So for the purpose of this training, let's say you are going to sell cement. So it means that we need to recognize that product. That product. Now at Tech Age Limited, let me be very practical here. At Tech Age Limited, we offer remote accountancy, we provide software solutions, we develop softwares, and all that. Our aim is to just empower MSMEs with innovative solutions. So we have services, we have products. Now, just beside the customer sub model, we have products and services. So as I recognize the customer on the system, I need to also recognize products and services on the system. So when I click on the product and services, I come to the new. Now, when you click on new, unlike product customers that came straight, product and services, we have 4 different products or services on QuickBooks. We have inventory product, non-inventory item, we have service, and we have bundle. Now, when you talk about inventory, that is products you buy and or sell that you track the quantity. So there are some products that you keep in your warehouse that you want to track the quantity. Let's say you are selling cement. It is an inventory item. Now, a non-inventory item, they are items that you cannot track its quantity. Cannot really track its quantity. That is a non-inventory item. A service, as we know, is something that is not tangible. We are selling, we are rendering services, so consultations, legal service, professional services, accountancy, all those things are services. And a bundle is just like a combination of 2 or more products or services. So typical example is that you are in a business where it gets to a festive season, you have to sell what we call hampers. And you know that for every hamper, there are a lot of products that have come together to form the hamper. So in that case, it means that they are single products that are coming together to form a bundle for a price. So you create that. So I'll create a service. When you click on a service, it comes up. Now, the name of the service. The name of the service. So let's say QuickBooks setup and configuration. This is our service for the purpose of this training. So this is the name of our service. Now, when you see SKU is what we call the stock keeping unit. There are specific tags or specific codes that are being attached to our product to give it some uniqueness. So in a case where you sell, let's assume somebody is selling cars, and then with the cars, there are various brands, but every brand comes with a specific identification. You can use an SKU to do that. You can also categorize the product or service. So now I've set up what we call the QuickBooks setup and configuration as a service. Now the income account that is tracking this product is services, and then I can set the sales price or the rate. I can always choose to edit it whenever I'm creating a form. So when I say a form, I am talking about an invoice, I am talking about a sales receipt, I am talking about quotation or estimate. So I'll save and close. The other details can be dealt with later on. So it means that for the purpose of this training, I've created a service that is called QuickBooks Setup and Configuration. So now we have the basic players in this transaction we are going to deal with. So we are having customer, that is Tech Age Limited. We are having a service that is QuickBooks Setup and Configuration that we are going to use for this sales transaction. So now back to our focus from quotation or from estimate or from pro forma invoice through to receiving payment. So on this system, what happens? We know that when it comes to sales, there are basically 2 types of sales. That is whether the sale is a cash sale or it's a credit sale. So we know that for cash sales, we are selling for immediate payments or receiving of the consideration. But then for credit sales, the buyers or the people, our customers, are going to pay at a later date or at an agreed term. So that is the two major aspects of sales you are going to deal with. Now, when it comes to cash sales, for cash sales, we know that the workflow is very easier. You exchange the good or the service or the product or the service for immediate payment or receiving of consideration. So with that form, the workflow is very easier. Now, let's assume somebody comes to you and then they are requesting for an estimate even before the sales transaction can be initiated. So estimates in some transaction, they will say estimate. In some offices, they will say pro forma invoice. Some offices, they will say a quotation. So now, still in our sales model under the or on the left navigation bar, we have estimate here. So you see estimate here. I'll click on my estimate. Now we are going to create an estimate. So when you click on the estimate, it will display the list of estimates you have already created on the system. So we are going to create a new estimate. So I'll click on the create estimate. I'll click on the create estimate icon, and then a form will come up for me to fill with the details of the estimate I want to create. Know that one thing you have to note is that estimates do not affect your financial statement. You can create as many estimates as you want. It will never affect your financial statements because there are no double entries assigned to it, and then they are just quotations that are being sent out to the customer for the customer to know prices. They are enquiries. So this is an estimate. You select the customer. So for the purpose of this training, we have Tech Age Limited as a customer. So I'll go through our search. I have Tech Age Limited. Immediately you click on Tech Age Limited, the email will pop up. If you added the billing addresses and all that, the addresses, the street numbers and all that, when you're creating a customer, it will all pop up here. But because I didn't add all those details, I just have Tech Age Limited. So this estimate is being given to Tech Age Limited. So now, if you also want this estimate to be sent to another email, or you want to copy another email, that is where we have the CC and the BCC. Now the estimate date is here as at today. We have 7th September 2025. Now it is important to note that for estimate, especially in our part of the world, you need to set expiring dates so that it will cater for unforeseen inflation or rising prices. So this estimate that I'm creating is for, let's assume this lifespan is 1 month. So I'll set it will expire on October 7th. So it means that after October 7th, if a client comes to you with the same estimate saying that I have now accepted the estimate, therefore let's proceed to have the transaction, you may have to review the quotation if prices have been risen up or the prices have gone up. So that is the reason for the expiring date. Now the accepted by and the accepted date are for the accepting or confirmation of the estimates. That one we will talk about it. Now, the main deal is for you to select the product or the service that is in question. So in our case, we said that we are rendering a service called QuickBooks Setup. So QuickBooks, I'll set through the service because I have already added the product or the service. It will pop up here. If you haven't added it, you need to add it to your product and services before you can create this estimate. So I'll create this QuickBooks Setup and configuration. I'll give you the description. So setup includes a normal setup, configuration, and let's say data migration. Let's say 2 years data migration. So this description gives more information about the service you are going to render. So now the quantity is 1. The rate, you now set your rate. So let's say $2,000. This is for the purpose of this training. So you have $2,000. I'll not talk about the taxes for now. We have a session where we dive more into taxes. So we have $2,000 as the estimate. So now when you come here, there is discounts percentage and discounts value. If you want to give a discount, you can give it as a percentage or a value. So if it is percentage, you switch it to percentage. If it is value, you switch it to value. So you can have, let's say, 5% discount, and then it will be auto calculated as 100. So it means that the estimate value is 2,000, but the discount is 100. That is giving you a subtotal of $1,900. If it is a discount value, you switch to value and you type in the value. So let's say $500, and then you now have $1,500. Yes. So now I don't want to give you any discount for now. Now there is what we call the note to customer. At default, the note to customer is thank you for your business. As part of the settings and preferences, when you are setting up the books, we have how we set up the default note to customer. So some businesses will prefer to put their because there's an estimate, they will have to put some words that will convince the people to buy from them, right? So that you put the message here, and then that is that. Now you want to add a memo for internal purposes, you can add it. Attachments, if possible, you add it. Now we have save, but then there is also an arrow here. So when you click on it, you have save and new and save and close, or review and send. Review and send means that you are sending it to the customer, and because there's a system that is automated, it will be sent to this particular email that you provided as a customer email. That is hello@techageltd.com. So I'll save and close, and then we have this. So now, as part of the estimate, I have on the 7th of September 2025, I have TechAge Limited with an estimate that is pending. So you can still review your estimate that you have created. So when when you want to review your estimate or you want to edit it, you see the action, another action bar, you have view or edit. When you click on view or edit, it will take you back to the form that you created, and then you edit it. Yes, so it was 2,000. Yes, there was a sales tax that was applicable, 160. I said we really talk about the taxes, right? We talk about the taxes. So for now, let me clear it. I'll not use the taxes for now. So now it's still 2,000. So I'll save and close. So we have an estimate that is created, 2,000. So what happens? You have sent it to the customer. The customer came back telling you that, oh, 2,000 is too much. Try and do something about it. So you decided to reduce it a bit or give a discount. So that one is what we just did. You can review or view or edit, and then you change the figures in there. Mind you, it is still an invoice. It is still an estimate or a pro forma invoice. So you can always do changes to it. Now, there is what we call a status. So the date, the estimate number, the customer name, the amount, the status. You see that the status is pending. That means that it is pending approval. So if it's pending approval, the customer has not yet accepted it yet. So when a customer accepts it, you can come to beside the send. We have a certain arrow here. When you click on it, we have mark as accepted, convert to invoice, view or edit, duplicate, share, estimate, link, print, or update status. Now, when you click on update status, you can change it from pending to accepted to close to declined. When you view or edit this invoice, this estimate, you can always come in to make changes. You can accept it by somebody. So who accepted the invoice? You provide the details there, and then you provide the acceptance date for the invoice to be accepted. So now, immediately you accept this invoice, or this invoice is being accepted, the status will change. So if I mark accepted, it will ask me accepted by who? So let's say accepted by Emmanuel Ansa. And the date is today. So you sent it today, they accepted it. So when you update it, you see that the status has changed from pending now to accepted. So we know that immediately an estimate is accepted. That it means that we have the permission to proceed with the transaction. So one thing that you see here is that there is a change here. At first, it was sent. So we had view or edit, and then we also had sent. Now, immediately it was changed from pending to accepted. The action has changed from send to convert to invoice. That means that the information has been accepted. Therefore, we can create an invoice out of this estimate. Now, when I click on convert to invoice, the information on the estimate I created will be auto-filled in the invoice form. So mind you, the first one we created was an estimate. And then now it has opened the invoice form. And then it is linked, it's a linked transaction. So meaning that this invoice is linked to a certain pro forma invoice or a certain estimate or a certain quotation. So you know that the name was TechAge Limited, hello@techagelimited.com. Then the terms, the bill to is TechAge Limited. The terms, when you see terms here, it is talking about the payment terms. Mind you, this is a credit transaction. A credit transaction. We will come to the cash transactions. So you need to set payment terms. So if it is net 30, then it means that 30 days from the date of creating an invoice, they have to come and pay you, or the invoice will be due for payment. If you set it to due on receipt, it means that on that day you are taking your money, net 10, net 15, net 30, net 60, and so on and so forth. Then the invoice date is today. The due date is today because it is due on receipt. If I change it to net 10, the due date will change to 17th September. If I change it to net 15, the due date will change to 22nd September. So that is the beauty of the payment terms. Now, it has been auto-filled with the product and services. So don't forget that the product and services we chose was QuickBooks setup and configuration. The description was setup, configuration, and 2 years data migration. And then the rate was $2,000. So now you can still add a discount if you want to. You can give them discounts. So let's assume we are giving them 5% discount. So that was 5% discount will give us $100. So now the invoice total is $1,900. So we can save and send. We can save and send. Now let me show you how to save and send. So review and send. So when you are reviewing to send, the system will bring up the various details. So you see that there is an email body. Dear TechAge Limited, your invoice is attached. Please remit payment at your earliest convenience. Thank you for your business. We appreciate it very much. Sincerely, Chris Design and Landscaping Services. This is the name of the business we are using for this training. And it can be changed. This is a default business for our test drive. So the subject is invoice from Chris Design and Landscaping Services. We can change it to any. So you just type in the subject you want to, you attach the email is the PDF is attached, and the PDF is the invoice template. Then you send invoice, and then it will be sent to the particular customer email provider. Now, one thing that you also notice is that because we have converted it to an invoice, we are still at the estimate session. The status has changed now from accepted to converted, and it has now changed from convert to invoice to print. So this means that we haven't created an invoice manually. We just clicked on the convert, and then it's auto-filled on the invoice form. So now when you go to our invoices, we must see the TechAge Limited invoice there. So our invoices are here. We have to go through and see. Today is 9. So TechAge Limited is here. 7th September 2025. Invoice number is 1038. TechAge Limited, 1,900, due in 15 days. Due in 15 days. So net 15. So now we have view or edit or receive payment. So the flow that you have moved in right now, we started from creating an estimate. The estimate was sent to a customer. The customer accepted it. We accepted the invoice, the estimate here, and then we created an invoice. By the invoice we created, we just converted the estimate to an invoice. And then we came in here to see it as part of our invoices. So now we know that the last process is to make sure we receive payment. So now if you are receiving payment, then we know that because it is here, we have received payment here. When you click on receive payment, you have another form being popped out, and then the details will be auto-filled. You provide the payment details. So now the payment date will be there. So let's say after 3 days, after a week, after 2 weeks, they came in to make payment. You provide a date. So let's assume the date is 15th, and then you provide a reference number to the payment. You select what we call method of payment. So the method of payment are being set up on the system. So if it is cash, if it is check via MasterCard, a whole lot of any payment system that you have set on your system, bank transfer and all that. So let's assume it was cash payment. And then one thing that is also required is the deposit to. So deposit to means that when you received the money, which of your accounts, which of your chart of accounts did you deposit the money into? Is it a money that was given to you and then you place it in your undeposited fund account, or you placed it in any of your bank accounts? If that is the case, you choose the account that was placed in. So let's assume that they give us a check. Please, the check you see here, the CHECK, is the same as the CHEQUE. Yes, QuickBooks spells it in this way. So we deposited it into our checkings account. For the purpose of this, our checkings account is the account that keeps all the checks you have received from customers temporarily. So that was at a reference number. You can provide a check number 00137. Then the amount you received. Let's assume that for the first scenario, they gave us only $1,000. So they came in on the 15th of September to pay $1,000, but they are owing us $1,900. So when you scroll down, you see that even up here, you see that the customer balance is $1,900. Amount received on the 15th is $1,000. The invoice is here. The due date is 22nd. The original amount is $1,009. Open balance. Somebody will ask, what is the difference between the original amount and the open balance? The original amount is the amount on the invoice. That was $1,900. The open balance is the amount left for you to receive. So because you haven't received any payment yet, we are still having $1,900 as open balance. And now the payment you have received is $1,000. So in here, this payment, that is this $1,000, is being applied to the invoice. So you see that amount to apply is $1,900. Amount to credit is 0. The amount to credit is the excess. Let's assume that instead of $1,009, they gave you $2,000. So the $2,000, when you record it, when you record $2,000, you see that $1,009 will be applied to the invoice, and there will be an excess of $100. That is what in other software like ZoBooks, you see what you call unused amount and all that. This is an amount sitting in your account as unearned revenue. So it's $100 here, and then it will be in your account, and then you can apply it to future invoices of this particular client. But in here we received 1,000, so let's go by our 1,000. Yes. So now the amount applied is 1,000, and the amount credit is 0. As usual, you can add some memo. You can attach some documents. So we record and close. Now, mind you, we received part payment. Part payment. So when you come to the invoices, now the status of our invoice in the Tech Age Limited or in our books has changed from due in 15 days to partially paid. Partially paid, $900 due. $900 due. Later on, we can come in to receive the balance. So when you're coming in to receive the balance, the same process goes to your sales model, invoice, you locate your invoice, you click on the receive payment. This time we are receiving cash, you place into the savings account. The amount received is 900. And then you see that now the open balance has changed from 1,900 to 900, meaning that we have already received 1,000 and then in the past, and then now we are receiving the remaining 900. So we record and close. So immediately we record and close, the status will now change from partially paid to paid. So you know that when you scroll through to search for the Tech Age Limited, now you see paid and deposited. Deposited means that we have placed it in our account. In our account. Mind you, that when you receive the money, you didn't place it in undeposited funds. We place it in a bank account and a checkings account. So that is in a case where there is a sales credit transaction and then the money is received partially and later they come in to pay the rest. Now we will talk about another form of invoicing from an estimate called progress invoicing. Progress invoicing. But before I talk about progress invoicing, I would love to go through the cash sales workflow. Now, when somebody comes to you, Tech Age Limited comes to you to buy something. So let's say they are coming in to buy let's say they are coming to buy cement. Let's assume. So because we haven't created cement on the system, we'll create our product and services. The same process. Now, cement is what you want to track. It's an inventory item. So you click on the inventory. The name is GASM. You see, even in GASM, they have some, I think some is a concentration, something R. So let's say 35.5 R. Can attach a picture. Now, because it is an inventory item, the product type is inventory. The system will track it. So the quantity as at today, the initial quantity on hand, let's assume that we have 850 bags. 850 bags is a full long truck. So the long vehicles that we see around, when it's full, it's 850 bags of cement. The date, you cannot backdate because it is today you are creating this particular product. So you are tracking inventory from today. So from today, as it stands, the initial quantity on hand is 850. Where at that point you can set it to 50. And then because we are tracking it, the system will create a current asset account in our balance sheet that will be termed as inventory asset. We can change it or maintain it. We'll have another session where we talk about chart of account, understanding chart of account, and then we'll understand how our accounts are going to appear on our financial statement, taking into consideration IS1 and all the relevant standards. So we will save and close. You have created GASM. We will save and close. Now, we are going to sell to Tech Age Limited. By this time, it's a cash sale. So if it is a cash sales, it means that we can just go straight to the point and record payments. Mind you, when there is cash payments or there is cash sales, the name of the customer is not compulsory to be in your books. The reason being that you have already received the money from the person. So whether you provide the name or not, there is nobody to track. So that one, the name of the customer being on the form is not mandatory, but it is prudent that you add it for accountability purposes and then even for future customer relationship management and all that. So when there is a sales transaction, unlike the credit one where we created an invoice indicating a credit transaction, this one you go to what we call the plus new button. So just under the Intuit QuickBooks logo on the left navigation bar, there is plus new. When I click on plus new, I see sales receipt. I see sales receipt. I see sales receipt. Now, when you come to the sales model as well, you come to all sales. The all sales gives you an overview of all the transactions that have been passed, all sales related transactions that have been passed. Now, when I come to the new transaction here and I click on the arrow, I have invoice, import, invoice, payment, estimate, sales receipt also is here. So when I click on sales receipt, it means that this transaction is a cash sales. Therefore, you received payment immediately the service was rendered or the receipt was created. So the name of the customer, you see, is not in asterisk. It means it's not compulsory, but then it is prudent that we provide Tech Age Limited. And then the system will automatically pop up the email. So the sales receipt date is today. The payment method, we indicate it. The reference, we give it deposited. We we place it in undeposited funds. We haven't deposited it into any of our bank accounts. And this time they are coming to buy cement. And then we have the name of our product as GASM. Yes. And the GASM is 35.5R. So let's say they are buying 50. Now, note this. Immediately I hover my cursor on the quantity. You see that the quantity on hand pops up and the real other level or real other point pops up. This is to notify you that you don't have to issue more than you have. So we know that we have 850. You can't go and then create a receipt selling 1,000. That means that you have a negative stock in your books. So we are selling 50 at the rate of, let's say, 110 Ghana cedi each. And then the total amount is $5,500. Then we are giving a discount percentage of, let's say, 2%. That's $110. And this is our final amount. Let me clear the taxes. This is our final amount, 5,390. So this is for sales receipt. So for sales receipt, there is nothing like we are going in for invoice. They will accept it and all that. No. Invoice is for credit transactions, so I record and close. Now, immediately I record and close, this particular transaction will be created under the all sales submodel. So we have sales receipts for TechAge Limited. If you add a memo, it will appear here. It is paid. It is paid. And then you see that the first transaction that we had, the invoice was 1,900. And then we received a first payment of 1,000, which is closed. Second payment of 900, which is closed. We first of all created an estimate 2,000. We have converted it. So the all sales submodel gives you an overview of all the sales related transactions that you have passed on your system. Now, I spoke about what we call progress invoicing. Progress invoicing. So now I'm switching back to the credit transactions. There are times that, especially in the construction firm and then big contracts, you know that even with contract costing, when you're accounting for contracts, we know that we only pay contractors based on work certified. So they'll bring an estimate in government institutions and then government contracts. The contractor will bring an estimate, let's say $100 million contracts, and then you only pay them based on work certified. So they'll work and then you assess the work that they have done. They have certificates and all that on that, and then you certify the work. After certifying the work, then you make payments based on only the progress that has been done. So in that case, somebody will ask, how do we go by it? The system makes provision for that, and then you don't need to always come into the system and create a different invoice for it. So in progress invoicing, you need to create a progress estimate or an estimate, but in that case, you need to activate progress invoicing in your system. So in activating progress invoicing on our QuickBooks system, you go to the gear icon or the settings icon. So I'll click on my settings icon. Then I'll go to my account and settings. Now, when you go to account and settings, we have one section where we go into all these navigations. When you click on account and settings, we have sub models. We have the sales, we have the company usage, expense, time, and advance. Now, when I click on sales, all sales related settings are here. So when you scroll through, you see progress invoicing. That means you are creating multiple partial invoices from a single estimate. So I'll click on the edit or the pencil and I'll activate it. When I activate, I'll see. Immediately I activate it, it means that any invoice that I'm creating, after creating it, I can invoice part of that invoice. Of that estimate. So we have activated progress invoicing. I'll click on done. Let's go back to our books. Let me update the invoice template. Yes, so now we have activated progress invoicing. So let's create an estimate. We are taking this opportunity to go through the workflow again. I'll create an estimate, and then we are creating it for Tech Age Limited, and then we'll see how the progress invoicing works. So when I search for the customer, Tech Age Limited, the expiring date is 28th, and then the first one is, let's say, concrete. The rate is $10,000. The second one is Agasem. Then we have 500 bags. So mind you, the first sales receipt we created, we sold out 50 quantities of Gasem. So now our quantity on hand is now 800. So I'm selling 500 now. I'm creating an estimate for 500, and then the rate is $110. So now our total estimate is $65,000. $65,000. So our save and close. Now, when we are creating an invoice out of this estimate we have created, it is still pending. So let's assume that it is being accepted by Nanonsa. The date is next week. Accepted. Okay. When we are creating an estimate, an invoice out of this estimate, the system will allow us to create a progress invoice. So if I'm converting to invoice, so the system asks me, how much do you want to invoice? Remaining total of all lines. That means that you are going to invoice the total 65,000. Percentage or amount or manual entry of each line. Each line means that you are going to create an invoice out of, or we are taking part of each line. So Gasem, you take part, and then the concrete, you take part. So let's use percentage because we are dealing with a contract costing. So let's assume that the work certified is 25%. So we'll create 25% out of the total estimate that was created. So you know that 100% is 65,000. So if it is 25%, the system will automatically calculate it 16,250. Then I'll create invoice. It means that anytime I come back to that estimate, I have the remaining to also invoice. So the details will pop up. The term is net 30. 25% of $10,000 will give us $2,500. 25% of 5,500, 55,000 give us 13,150. So we are only invoicing 16,250. So we have created an invoice. So it means that now this customer is owing us 16,250. So we will save and close. Let's see what happens. What happens to the estimate created in the estimate submodel and then the invoice created. So we see that this 65,000, at first, if you convert the first scenario we had, when you converted the amount, you realize that it changed from accepted to converted. But this one, because we haven't converted the full amount, it is still at accepted, although we have created 25% of the invoice. We have created 25% of the total estimate at the invoice, and you still have a convert to invoice. So this time, when I click on the convert to invoice, I can invoice the total, or so I have, let's say 75. That is 48,750, and you can invoice it as well. When you come to the invoice section, it will appear as stated. So let's say for our Tech Age Limited, we have it here, 16,250 due in 38 days. You can receive payments on that. So that is progress invoicing, and then the normal invoicing, the 100% invoicing. 100% invoicing. Now, the next thing I would love to talk about, the last but one thing I would love to talk about for today's session is when there is a return. When there is a return. So we know that in dealing with sales transaction, in the sales workflow, there can be return invoice. That means that your customers are returning part of your goods. So you gave out 50 bags of cement, but that wasn't a communication. You had to supply, let's say, 45, and they are returning 5. So what happens? Somebody will ask what happens. So that one too, there are two instances. There's an instance where you are, or there is a refund. Sorry, there is a return where the refund is immediate. The refund is immediate. It means that immediately they bring you the goods, you are paying it there. And then there is one that they will bring the goods, but then the amount will be issued out to them later on or at a later date. So what happens is that on this system, we have a credit memo and we have a refund receipt. Credit memo and a refund receipt. You remember that when I went to the all sales sub model, under the sales model, when you click on the new transaction, there is what we call refund receipt. We have credit memo. And when I click on refund receipt is for immediate payment of the refund. So you give out 50 bags of cement. That one we sold it 500 bags of cement, and then you have invoiced 25%. So now Tech Age Limited is returning some goods. So we choose the name of the customer, Tech Age Limited, and then the other details will pop up. Now, payment method, how are you going to pay them? You are going to pay them via cash, and then you are refunding from what we call, let's say, the undeposited funds account. Now, what happens is that the balance here is 7,452.52. So every refund that you are making, you don't refund more than you have in the balance, else you have a negative balance in your books. So the goods they are refunding is GASM, and then they are refunding 5. The rate is 110. So it means that because you are tracking your goods, this 5 will now add back to your quantity at hand. So now you have 5 GASM products being returned. 5 GASM products being returned. So now it is $550. So I'll see. That is, we use the refund receipt for return invoice where the refund is immediate. You pay it immediately. That one you use the refund receipt. Now, in a case where you are going to refund at a later date, that one I said that we'll use the credit memo. So I'll create a credit memo. I'll choose the customer as usual, Tech Age Limited. The product is GASM. Quantity is 5. The rate is 110. I have 550 here. So now I am returning, or Tech Age is returning 550, 5 GASM, and then now the total amount 550. Now you remember, you see that when I hover my cursor on the quantity, at first, before the first refund that I did, it was, before I did the refund receipt, it was 675 quantity on hand. But because they refunded 5, it has now turned to 680. 680. That is the beauty of the tracking of the goods. So now we are refunding a 5. They are refunding 5. So we will save and close. And you see that now the quantity at hand will now change to 685. 685. So this one also gives you a breakdown of how your stock are performing. So if you have a low stock, it will show here. If you have a product or a product which is out of stock, it will show here. If it's low stock, it will show here. So that is basically when there is a return. When there is a return. Now, before I come into questions where we dive more into the issues that you raise, I mentioned that there is an automation that needs to be activated so that your sales process or your payments receiving process or your receiving your receivable collection period will reduce. In accounting ratios, we know that we have the receivable collection period where we indicate the number of days, the average number of days that we are able to collect our receivables. Now, it's important and prudent that we set up automated reminders. We can't always imagine you are in a business where you deal with thousands of customers. You can't always be asking your sales team or marketing team to be calling the customers and reminding them. Now, in Ghana, if you don't set up some reminders, sometimes they'll come in with the excuse that they forgot. So it is very important that you set up automated reminders. So let's go through how to set automated reminders for your clients that are owing you. So now we go to the settings or the gear icon, the account and settings. Then our account and settings, we go to the sales model where we activated the progress invoicing. So I'll scroll down and I see reminder here or reminders here. So I'll go to the edit, then I'll activate. Now, you can set up to 3 reminders. So I'll activate the first reminder. It is currently off, so I'll activate it. I'll put it on, and then I'll set the frequency at which it should remind my people or my clients or my customers or my patients or however you call your buyers. So at default, it is 3 days before due date. But no, for the purpose of this training, I want to set this one for 1 week before the due date. And then you can add a message. So we are sending a reminder to let you know that invoice number, so it will quote the invoice number on the invoice you sent to them, has not been paid. If you have already paid this invoice or have any question, let us know. Have a great day. Then provide your details. You can always change this information here. How you want it to go. If you want to use email greetings, if you want to use dear or to, or you don't want it to go in the name of anything. So it is either blank, dear, or to, and then either the full name, title, last name, company name, or display name, based on how you have created a customer on the system. That is the first email. You can also automate another email where you can say that 3 days to due date. So I can clear this. Say 3 days. 3 days to due date. Or 14 days. Sorry, the first one was 7 days. So maybe on due date or however you want it to be. If you are setting it on due date, it means that the day that they are supposed to pay, it will go to them. You can customize the message as stated earlier. You can activate the last day. That is some days after the due date. So let's assume that after the due date, the system, you haven't received any payment. Now note that if you're activating a reminder that is set for after the due date, you have to also make sure that immediately you receive payment from a customer, you're going to record it. Else, let's assume that a customer paid you and then you haven't recorded it on the system. The system will think that the person is still owing you and will trigger an email to them. It might cause confusion. You have to make sure that you are up and running with your recordings, data entry. So 3 days after due date, we are sending a reminder to let you know that invoice number has not been paid. If you are already paid, you can customize it and all that. Now, let me talk about this before I come to the questions. Please, if you have any question, kindly drop it in the chat box. I will attend to it shortly. Late fees. I'm talking about this because when I was talking about the reminders, you can set a reminder that after the due date, you can give what you call a grace period. If you don't pay, a late fee applies. That depends on the terms and conditions that you have in your business and you have with your customers. So as we know that in dealing with an institution like GRE, if you don't file on the 14th date, by the 14th or before the 15th day of the month after the filing period, there is an automatic penalty of 500 cedis that is being charged your account, and then 10 cedis daily. That is late fee. So this one you can also do same. You can either set what you call a flat fee or a percentage of remaining balance. So based on the discussion, you have already told them that if they don't pay on time, there's going to be a flat fee that will be charged. So this one, you don't need to come and then add it to the system. The system itself, so far as you have charged it, the system will add it to their outstanding balances. So if it is flat fee, you can say that, let's say $100 once per invoice or per month or per day. So if it is once per invoice, it means that if they don't pay, even if they take 100 years to pay, the only charge will be $100. If it is per month, it means that every month delay will attract $100. If it is per day, every day of delay will attract $100 per day. Now we have what we call grace period. The grace period means that yes, the due date is up. They are supposed to pay on the 30th of September, but then you are giving them a grace period of, let's say, 5 days, so that this late fee you have set here will only apply after the grace period. So if I set a grace period of 5 days, it means that grace period begins the day after the due date. Late fee will not accumulate during that time. So this late fee, that is $100 once per invoice, will only apply after the grace period. That means that if the payment term is 30, net 30, because of the grace period, the flat fee of $100 will only apply after 35 days. Now, if it is not a flat fee and it's percentage of remaining balance, you can set it that 3%. So we'll be charging 3% of remaining balance, 3%. So when you are dealing with a tier two institution like Petra, it will tell you that if you fail to pay by the 14th of the month after the filing period, they are going to charge, there is a surcharge of 3%. So you can do same, set a certain percentage. The frequency can be once per invoice, per month, per day, and you can apply it. So we have apply an upfront one-time flat fee. So if you are applying an upfront one-time flat fee, it means that just in the case of GRA, the flat fee, that is the upfront one, is 500. Then you have 10 days per every day of delay. So you can do same here, and then you'll be automated. These are just to make sure that your customers pay their debt on time. So if they know, I think it's one of the measures placed by GRA to also ensure that people are tax compliant. So you can also adapt it. In as much as you are selling to people on credit, you can adapt it. When they come, before you sell to them, they know this rule, and then they will comply, and then it will help you in collecting your receivables faster in that regard. So at this point, I think we have gone through quite a number of things. I'd love to take some few questions, and then we can take it up from there. Please, if you have questions, kindly drop it in the chat box. Why did you set ROP to 50? Yes, so the if you are talking about the reorder point, it was just for the purpose of this training that I set it to 50. So it means that when your goods quantity reaches 50, the system will prompt you that you have low stock. You can set it based on your company, your policy. Yes, your policy. Let's say your reorder point is 1,000 bags of cement. It depends on your business. Yes. So that is that. Follow us on all social media handles: LinkedIn, Facebook, Instagram, TechAge Limited. TechAge Limited. You can also subscribe to our YouTube channel, where we have videos being uploaded on our YouTube channel, created not long ago. We have been telling you in our trainings that we'll be giving you tutorials to help you in your practice. Yes, so we'll be doing that to help you. So kindly subscribe to our YouTube channel, TechAge Limited, and then it will be of help to you as well. Is it a must to update the reminder when your client has paid before due time, or it will be updated automatically after you have done the receipt payment process? Yes, thank you very much for your question. Yes, the system will not trigger any reminder email if you have received payment, if you have recorded payment. So the reminder only works when there is an outstanding balance, or trigger the mail when there is an outstanding balance. So you don't have to go back to deactivate it. No, it is an automated process, and then it works in that regard. We call recurring invoices. Because QuickBooks Online is designed to help you automate most of the processes, we know that there are some invoices that are recurring every month or at a certain interval or a certain frequency. You create that particular what you call that particular invoice. So you want to set it up on the system. You want to automate it so that you don't have to come in to create it. You might even forget. But at the end of each period, the system itself will create it. So let's go through that shortly. So now we know that under the transactions, right? We have recurring transactions. So at the left, on the left navigation bar, you have recurring transactions. Now we are going to create a new recurring transaction. So for the purpose of the sales workflow, we are dealing with recurring invoices. Since I'm talking about recurring invoices, I also talk about recurring payments. So click on the plus new. Which transaction type are you creating? Are you creating a recurring bill, a non-posting charge, and all that? We are going to create recurring invoice. So we are creating a recurring invoice. So I'll choose invoice and I'll click on the OK. So the recurring invoice is the same details, but then you want the system to create it at the interval or at the frequency that you set for it. So the same process, the same form that we used to create our invoice. So I'll select the name of the customer, Tech Age Limited. So I'll choose Tech Age Limited. You choose the preferred or the payment terms. If it is net 30, you choose net 30, net 60, net 15. Due on receipt. Then you choose the product. So let's say the QuickBooks Online setup. That is our service and configuration. Let's say the rate is $200. Now, the type, our default is a scheduled, right? It is a scheduled, reminder on scheduled. We have the number of days in advance, create number of days in advance, automatic send emails, include unbilled charges, mark as print later. So now what happens is that this the first aspect that we created was just for the invoice details. Now we are going to set up the system to make this invoice recurring, meaning that to repeat it at a frequency that you want to do. So we are scheduling this particular invoice to be created. Now the interval details, repeat on first day of a month. Which month are we starting? Which date are we starting? So let's assume that we are starting from today, right? And then we are saying that when should it end? In a case where you are creating an invoice, you want it to repeat till a particular month or till a particular period. Let's assume that it should create till the end of next year. So by, that means that by, then we come and choose the day. So by December 2026, it should stop. So we are creating this invoice till December 2026. So we create December 2026. Let's assume that 31st December 2026. And this is going to repeat. Is it monthly? Is it weekly? Is it daily or yearly? So we are saying that it should be sent to this particular customer here in Tech Age Limited monthly. So the number of months, it will send once every month. And then it will be sent the first day of the month. That is our prescription or our policy. So it will send on the first day of the month, and then it's ending on 31st December 2026. That means that the last invoice that will be sent will be 1st December 2026. So this invoice prior to the date for the next invoice, it will create an invoice saved in draft. So when you say an invoice is saved in draft, it means that it has been saved for review before we will send it, or it hasn't been approved, or we are going to edit it later on. So if it is saved in draft, that means that it's not going to affect our financial statement. It's not going to affect our books. It is there saved in suspense where we would later approve it. So do you want to automatically send bills? Do you want to include unbilled charges? All these are settings based on how you want the recurring invoice to be set. So what happens is that at every point in time, if this month's end This month owns is being sent to the customer. The next one that is about to be sent will be created as a draft. And then when it is time, the time that we have set for it, that is the first day of the month, it will be sent to them. If you wanted to send automatic email to them, we can set it up. And then it will be sent to the email provided for this customer. Now, note that if you haven't provided email for this customer, you can't take it or check it for it to automatically send email. Yes, so you need to provide that. So we will save this template. So it means that there is a scheduled invoice that is created here. Now, you can also, in as much as you have created recurring invoice, you can also set recurring payment. That means that you know that a customer will definitely pay. Therefore, you are asking the system to automatically record the payment. Automatically record the payment. So you see recurring, convert to recurring payment. We also have another sales model. You see that we also have recurring payments here. So either ways you can set your recurring payment. Now, if you are converting the recurring transaction that you created to recurring payment, it means that it will go in line with this particular scheduled invoice you have created. So you are converting to recurring payment. The form will pop up. The form will pop up and then you follow the process. So with the same process, this is the rate, the amount is 200 as we provided. I stated that this session is just the information on the invoice. Now, which date should it start? As we did for it, when to charge, future date, and all that. So you set this one. You want to set reminders, the reminders that we spoke about. Remind your customer to accept the recurring payment request a few times before it expires. So how you want the reminders to, you want to activate it. If not, you deactivate it. So that is for the recurring transactions. As we move on with other models, you understand that recurring transactions is not only tied to recurring invoices. You can set up recurring bills and others as well. I saw a certain question here. Please, how about multi-currency? Yes, so multi-currency is also a session that we can activate. I'll take you through it shortly. So to activate multi-currency, you realize that all the transactions that we were dealing with were in dollars. So in a case where you want to create a transaction or an invoice for a CD customer or an Euro customer, you have to make sure that your system or you have set up your books for multi-currency. So multi-currency, come to the advanced or the advanced. Yeah, so on the advanced, we have currency. So you know that you see that the home currency is USD, right? So before you activate multi-currency, you have to make sure that your home currency is set right, because you cannot undo multi-currency. So in our case, our home currency is USD. That is why all our transactions were in USD. So I activate multi-currency, and then multi-currency may be right for you if you have financial transactions more than one currency. You cannot turn it off. So let's check that I understand and I cannot undo multi-currency. So you see. So what it means is that now you can create CD customers, you can create Euro customers and other currencies as well. But then your presentation currency will be USD. And then the system will automatically be calculating for the exchange gain and losses when you are transacting between currencies. So it follows the IS 21 processes, and then it fetches the exchange rate from the World Bank and all that. Thank you very much. I think I've gone through a lot here. We would be doing more of these webinars for us to all learn. So let's kindly subscribe to our YouTube channels, our YouTube channel, Tech Age Limited on YouTube, and then we would give you more resources for you to learn, to watch, and to use as references. At this point, I would love to end here.